Today, we'll be taking a closer look at Apple and evaluating whether the company remains an attractive long term investment. Apple is one of the world's most valuable companies and is best known for products such as the iPhone, Mac, iPad, Apple Watch, and AirPods. Beyond hardware, Apple has built a rapidly growing services business that includes the App Store, iCloud, Apple Music, and Apple TV Plus. The company's strong brand loyalty, loyal customer base, and integrated ecosystem have helped it maintain a dominant position in the technology industry. Looking at Apple's key stock metrics, the company currently has a market capitalization of approximately $4.6 trillion, dollars, making it one of the largest publicly traded companies in the world. The stock trades at a price to earnings ratio of around 37, reflecting investor expectations for continued growth and profitability. Apple also generates earnings per share of approximately $8.25 and provides shareholders with a modest dividend yield while continuing its large share repurchase program. These metrics suggest that investors are willing to pay a premium for Apple's quality, stability, and long term growth potential. To determine whether Apple is a worthwhile investment, we can examine several key areas of the business. First, revenue growth. Apple's revenue growth is relatively steady rather than explosive. While iPhone sales remain the company's largest source of revenue, its services segment continues to grow rapidly and has become an increasingly important driver of overall business performance. Next, profitability. Apple consistently generates strong net income and maintains some of the highest profit margins in the technology sector. The expansion of higher margin services has further strengthened profitability over time. Looking at valuation, Apple's price to earnings ratio is higher than the broader market. This indicates that investors are paying a premium for the company's quality and reliability. While the stock is not particularly cheap, many investors believe the valuation is justified by Apple's competitive advantages. Regarding debt, Apple carries a significant amount of debt on its balance sheet. However, the company also holds substantial cash reserves and investments, resulting in a strong overall financial position. Cash flow is another major strength. Apple generates hundreds of billions of dollars in operating cash flow, which allows the company to fund dividends, repurchase shares, and continue investing in innovation and growth opportunities. Finally, Apple's competitive advantage remains one of the strongest in the world. Its ecosystem encourages customers to stay within Apple's product lineup, creating high switching costs and exceptional brand loyalty. Taken together, these factors suggest that Apple remains a financially strong company with durable competitive advantages and solid long term growth potential. While Apple remains a strong company, investors should also consider several important risks before investing. First, Apple remains heavily dependent on iPhone sales. Although the company has expanded into services and other products, the iPhone continues to generate a significant portion of total revenue. A decline in iPhone demand could negatively impact financial performance. Another challenge is slower growth in mature markets. In regions such as North America and Europe, smartphone adoption is already very high, making it more difficult for Apple to grow sales at the same pace. Seen in earlier years, competition is also increasing. Apple faces ongoing competition from Android smartphone manufacturers, while the rapid rise of artificial intelligence has created new competitive pressures across the technology industry. To maintain its leadership position, Apple must continue to innovate and adapt to changing consumer preferences. Regulatory pressure is another concern. Governments around the world have been scrutinizing Apple's control over the App Store and digital payment systems. Future regulations could reduce Apple's ability to collect fees from developers, potentially impacting the profitability of its services business. Finally, investors should consider valuation risk. Apple stock currently trades at a relatively high price to earnings ratio compared to the broader market. This premium valuation reflects strong investor confidence, but if future growth falls below expectations, the stock price could face downward pressure. Despite these risks, many investors believe Apple's strong brand, financial strength, and competitive advantages position the company well for long term success.